Good morning. It's time for your morning commentary. I'm Aquiles. Nice to see you. Powered by Starbucks and some food that I made this morning. Just wanted to get into a shortened week. Have only a couple of trading sessions this week, and there's talk of a Santa Claus Rally. Now, what does that mean? That just simply means from Wednesday on, we've seen markets traditionally go up. Last year, we had an anti-rally where they actually went down about 0.4 to 0.7% respectively. So this year, we're still expecting some positive notes. I want to begin with, if you haven't added any to your portfolio, we are seeing more of a rise in the gold and silver securities right now, and some have been high up there. But you know what? When the market craps out, people go flying to gold. They also fly into treasuries, and they go into other areas that they deem safe. So, but then you'll have gold and silver lagging for a long period of time. So buyer beware. Have to be aware of these things. But why not start to put it into your portfolio just a little bit, not a ton, all right? So that's one thing. A second thing I would mention, if we do have a rally, that's a great thing, but I can remember not too long ago, just a few years ago, we had a downtrend in the month of December that was close in the S&P to 10% plus. So look at your portfolio right now. Ask yourself, are there areas that I should be perhaps taking a tax loss on and offsetting with any gains? Or should I be, looking at something different at this particular point and talking to somebody different? Another thing I would keep in mind is mortgage rates right now. It's an interesting paradox because we're at all-time lows for the year as far as mortgage rates are concerned, but the bulk of people, over 54% of the people here in the United States, have rates that are under 4%. So it doesn't matter the rate right now. They don't really care. They're not going to sell. They're not apt to sell as quickly when that happens. All right. So it's a bit of a paradox. It's a bit, I personally don't think we're going to see 2% anytime soon again. I'm wondering if we could get it to 4% in the near term. It could happen in a couple of years, maybe. I don't know. But what I really foresee happening is that mortgage rates are going to stick about the 5% interest. If they start to lower rates again next year, if the Fed starts to do that, I might see a little bit more of a drop, and it'll be interesting to see. The other thing I would keep in mind as we're going along is when we're talking about fixed income or bonds, we're not going to get a ton of return from that, all right? Your safety costs you. Doesn't mean I'm the ultimate stock jockey or whatever. It's just we're currently favoring stocks right now. The technical term is overweight. We are putting more money into stocks than we are into bonds. As a portfolio manager, the one thing that I've learned over the years is that you are not going to save yourself by going only into bonds, which is the big fallacy I see when you're 50 years and older. I'm 56 and I have no intentions of going into more bonds at this point. So, think about what got you there. What got you there was going into stock mutual funds, stock equivalents. Why change it just because you're nearing retirement? I know I might get a lot of flack on this, but I say get the flack out of here. No, I'm just kidding. Just keep in mind that what got you here can continue to outpace inflation and has for a very long time. Keep that in mind. So who's right for Larrea Wealth? If you're retiring or you're near retiring, you should be thinking about all the big and small decisions that you're going to be making going forward before you retire or as you're retired. Do I need to grow my money? Do I need to protect myself at this point? Why don't you reach out to us? If you qualify, you get on my calendar, we can talk a little bit more. Also, if you're in a transition with a job, you say to yourself, my job has quietly exited me in a very small period of time. Not to make light of that, people lose their jobs in the fourth quarter all the time, but you need to make a decision. I've had people from Verizon have 11 days to make a decision about a lump sum distribution and or an annuity payout. One meaning you take one all at once, the other meaning you take it over your lifetime. Which is better for you? One may not be necessary. You might think safety is better than the other when you can create your own type annuity. So you don't need your company to do that for you. The last thing is you are sick and tired of trying to go it alone, trying to do this yourself. And I tell you, you don't have to. Reach out to us, point on the button below, or that way, and find out how Larrea Wealth can help you maximize your returns, minimize the amount of risk, and really just take you in the direction that you've been looking to go all along. Having somebody in your corner like myself is better than going all alone. I do this every day, folks, and let me tell you, if you think you can do it, go right ahead. Have a wonderful day and enjoy your holiday week. We'll be talking again soon.